Hi traders, hope you all well. This is not the full market analysis for the 13th of February. I mean, there's not much going on at all. The PMI figures come out and the dollar did rally a little bit on the lower time frame. Weakened on the lower time frame, but came back, and there's really not much going on here on the US dollar index. As you can see, very little going on indeed. And we can look at the euro dollar. We're waiting for the euro dollar to come down. We're waiting for the pound dollar to sort itself out, etc. So there's quite a bit going on, but nice setups, but nonetheless no volume in the market. So today, what I'm going to talk about is gold on steroids on the 10-minute chart. I'm going to make some adjustments. So if you have the chart and you're happy to make the adjustments, if you're making a ton of money, then just carry on doing what you're doing. So let me explain how this works, why it works, and how you can get the best of this. Now, one thing I've banged on about for years and years and years is the 50-day moving average. And this is a really important factor in gold trading on the lower time frame as well. So, and you can probably see that here. What I normally do is I go down to the 5-minute chart and I wait for it to move above the 50 moving average, and then I buy it or I sell it, and the way it goes. Now, what you can do if you want to, totally up to you, you can actually just use the 10-minute chart. There are some adjustments needed, so you can align this green line here with the 5 minutes. So you just go down to the moving average here, and then you change it from 50, which it normally is, to 26. Okay. Now on the other tools, the entry points, I want you to change this to 7, 1, 12, 26. Okay, and I'll explain all that, and if you've got any questions, come back to me. Now, if you don't have the software, you might not know what I'm talking about, but anyway, you can actually see exactly what's going on here. This measures divergence in terms of negative divergence, positive divergence, and we can see that throughout the chart. Here it's drawn on the chart already, so we can expect a bounce from here into demand. Okay, bounce into demand, and so on and so forth. So now we speeded up this moving average from a 50 to a 26 on a 10-minute chart. It is going to emulate a 5-minute time frame, so you don't have to go down into the 5-minute chart if you don't want to. Totally your choice. So here are the trading rules. Once you've done that, then you're going to have these tools. I've put the MFI here. So the MFI gives you the buy zones, but of course you want it to be on a demand area as well, so that's the important thing. Let's get rid of these for the moment, and I'll come back to each one of these so you can understand better about what we do. So this is once it's below the 20 and the price is in a strong demand zone in green, then of course we are looking for a potential buy. So there we are, and the price moves above the moving average, and then the price moves up. And if you bought it there, if it was around at 12 noon, 12 noon is not usually a good idea to come into a market, but in this instance it would have got you 523 pips, so, or more than that actually. Now here we can see that there's a sell below the moving average here and here, so the price fell below here. And what you can do is just draw a line here on the body of that bottom there, and as long as the price remains below that support line that it was support, is now resistance, we can actually sell that below the moving average. We had a nice move this morning, didn't we, from this area here, 200 pips or so, up into this previous swing high. Let me draw a line there, so up into that area. We can see that that was actually a perfect trade. It could have gone much higher, but now the supply has been taken out. There would have been a supply zone here, the previous high, and the price would have fallen accordingly. All right, so look out for that. Now, so a couple of things: look out for buys areas in demand, buy areas in demand, and then sell areas in supply. This is really important. So you've got the supply for selling and you've got the demand for buying, hence the name and the term. Now, this tool here gives you the entry point to get into the trade, and it has been adjusted to 7, as I mentioned earlier. On the 10-minute chart, we can see that there's a buy order here. If I put the previous high there, you can see that there's a buy here at 49.62, and all you do here simply is you put your entry point on that previous high, and your stop loss is below the moving average and a little bit more. Okay, and make sure that you've got at least 1.5 risk to reward. 2 is lovely. If you can get that, then excellent. So in this selling opportunity here, you can say that the price has fallen below the moving average. We have a line drawn here, which is the previous body, and we can say that at this point at 49.79, we can say that this price is going down. Previous swing high to the previous swing low on this line here, if you can see that there. Okay, so what you're doing is measuring the previous swing high to the previous swing, nearest previous swing low at 49.52, round it up, and you've got a nice 274 pips there. You have the bears coming in, and then you have the bulls coming in. The bulls coming in, and then you have the sells coming in here. All right, so the bulls are in at the moment. We've had a breakout of the previous low, the previous high of 5,000 or just below. So we can expect further upside momentum. I did mention that we need a pullback really back to 49.86, 87 before we would have a safe entry. Final one. This measures the number of buyers or sellers in the market. So very special settings. Don't try and guess this one. You'll be there for 35 years. As long as I've been trading, trying to find out. But we can see that whenever it goes all green, we have all the buyers in, and the price goes up. Once it goes all red, we have all the sellers in. All right, so we can see that all the sellers are coming in into this demand area, and that's when you want to pull the trigger, as it were. So once you pull the trigger, you're going to hold it, and we can see the price is weakening. Really, it's below the 50 moving average here on the 5-minute chart. So we can see that the price is sort of hesitating, but it's Friday afternoon. Volumes are very light, as we've seen in the forex markets, and very low volumes in the markets so far. So congratulations on the moves today. Hopefully you've made some money, and if you've got any questions, then please let me know. This is a fantastic system of making regular profits every day. So enjoy that video.